We'd like to open our meetings for these I&I events with a prayer. And today I will use the Collect for Commerce and Industry from the Book of Common Prayer. Let us pray. Almighty God, whose Son Jesus Christ in his earthly life shared our toil and hallowed our labor, be present with your people where they work. Make those who carry on the industries and commerce of this land responsive to your will, and give to us all a pride in what we do and a just return for our labor. Through Jesus Christ our Lord, who lives and reigns with you in the unity of the Holy Spirit, one God, now and forever. Amen. It's now my pleasure to introduce to you Michael Hood. And Michael joined in 2023, sits on the 8-person executive team of the Church Pension Group. And I will say that he has become, in very quick order, not only someone who leads us in the investment group, but a personal friend and someone who cares for all people that we serve. And so I introduce to you Michael Hood.
Thank you, Clayton. Hello, everyone. Thanks so much for being with us today. We appreciate you dialing in, your interest and your presence. As Clayton said, I'm Michael Hood. I'm the Chief Investment Officer here at Church Pension Group. And this is the latest in our series of Insights and Ideas events, which are devoted to conversations about various topics related to socially responsible investing. Today's discussion, as Jermaine said, is entitled Episcopal Perspectives on SRI. And I'm very happy to be joined by 3 wonderful guests who can help provide exactly those perspectives from their positions around and associated with the church. So with us are the Reverend Canon Mark Furlow. He's Canon to the Ordinary and Chief Operating Officer in the Diocese of Southwestern Virginia. Meredith Jenkins, the Chief Investment Officer at Trinity Wall Street. And Monica Spencer, whose day job is as Chief Investment Officer of the Weizmann Foundation, which is a not-for-profit that supports scientific research, but who also volunteers as a member of the investment committee for the Diocese of New York Investment Trust. So we've got a couple of people who are operating at the diocesan level, one at the level of an individual parish, albeit a somewhat unusual parish, and then I'm here representing the Church Pension Group. As Jermaine said, please feel free to submit questions. We'll try to weave those in as we go along. We've got a lot to talk about, so we may not be able to get to all of those, but we're certainly grateful for your expressions of interest and letting us know the subjects that are on your minds. Before we jump into the substance, maybe I could ask each of you just to quickly give us a little bit more of a sense of what your investment role is as it relates to the church. I said your names and your titles, but maybe you could just tell us a little bit about what's the pool of assets that you're involved with, what those funds are used to support, and just a quick sense of what the investment approach is. Meredith, maybe start with you.
Sure. I'm Meredith Jenkins. I'm the Chief Investment Officer at Trinity Church Wall Street. I joined Trinity Church in 2016 as we were diversifying away from some of our real estate exposure that was our most significant exposure historically. So today we have about $6 billion, and about 42% of that is in our commercial real estate portfolio in New York City. And the remainder, 58%, is in our diversified portfolio, which is similar to the Church Pension Group's portfolio, diversified, invested around the world, invested across asset classes. I lead the teams that oversee both of those parts of our portfolio. And when we get further into the responsible investing, we take an approach that we call responsible investing to both the real estate and to the diversified portfolio.
Thanks. Mark, how about you?
Sure thing. So my name is Mark Furlow. I'm the Canon to the Ordinary and Chief Operating Officer in the Diocese of Southwestern Virginia. We have a subsidiary corporation of our diocese known as Trustees of the Funds that helps manage all of our diocesan assets and parishes and other custodial account holders that want to invest with us. So we have about a little over 20 million in assets, half of which are the diocese, half of which are custodial account holders. And we manage at a local level in the diocese, and we work with an outside manager.
Mark, being canon to the ordinary is a pretty broad job with a lot of different responsibilities. What percentage of your time roughly would you say you have to devote to thinking about investing?
If you ask me a percentage, I'm going to have to calculate that. But I would say probably about a quarter of my time is dealing with general diocesan finance. Maybe about half of that is associated with investments. Maybe about a third to a quarter is financial, and a portion of that is as assets. So it is a broad job, and chief operating officer as well. I give one title to the church and I give the other title to the banks, and it seems to work out okay.
So you've got to be pretty efficient with your time when you think about investing, given all the other things you have to balance.
Yes, I support the board's work. Yeah.
Monica, how about you? Maybe tell us a little bit about your day job and then the investment committee.
Sure. So my day job, I'm Monica Spencer. My day job is as the CEO and CIO of the Weizmann Global Endowment Management Trust, which looks after funds for affiliates of the Weizmann Institute of Science, a research institution. And in that role, I have a role similar to Michael or Meredith's, but with a fraction of their assets. But looking after a team that manages a global investment portfolio with a lot of diversified strategies. Aside from that, in my Episcopal life, I am a trustee and investment committee member of the Trustees of the Estate and Property of the Diocese of New York, which, similar to Mark's role, looks after about $100 million worth of assets that have been contributed from various parishes around the diocese and from the diocese itself. And so in that role, we too have an outside manager and a committee of folks with investment experience who engage that manager and engage with that manager on that asset allocation and priorities for that investment portfolio. I should say that before that, I was also served on the investment committee of my local parish, which is St. James Church. And I currently also serve as the investment committee chair at Groton School. So various connections to various Episcopal pools of capital over time.
That's great. Thanks, Monica. And thanks, everybody. It's wonderful to have all of you with us. So diving into some substance here. As a starting point, maybe we can think a little bit about what exactly it is we're talking about, because we use terms like socially responsible investing, and that can mean different things to different people. People also talk about ESG investing. That's maybe a little bit of an older term. ESG standing for environmental, social, and governance factors, which one can consider as part of an investment process. We also talk about impact investing. Meredith, I know Trinity's done quite a bit of thinking about the taxonomy of all of this and what all of these things mean. So SRI, ESG, impact, is that all the same thing? Does one encompass the others? What are we really getting at here?
We think of them differently. And to your point, I think different people can also have sort of different nuances on them. The terms that we use the most are responsible investing, which that's the umbrella for us that applies to thinking about tenants in our buildings, managers in our portfolio, and the underlying investments they make that are aligned with Trinity's values, and doing the work that underwrites all of that to get comfort that all of that is aligned with our values in terms of the investment decisions we make. So responsible investing is at the highest level. And then ESG, or environmental, social, and governance, that is something that we see as having developed over time as covering a very specific kind of set of environmental, social, and governance issues, and that it has a very specific meaning in a lot of the investment world. And there are certain standards that managers will follow that qualify under various ESG specific rubrics. So we see that as one type of responsible investing, and it is one thing that we will ask our managers about to understand how they underwrite the portfolios and the investments that they are in. The final term that we use a lot is mission investing. And I would say that in some ways is comparable to impact investing, which you had brought up. For us, we have taken a very focused approach to mission investing, in that we look at opportunities that are very clearly aligned with our areas of mission focus. And our areas of mission focus are addressing affordable housing and homelessness, particularly in the context of New York City, Mission Real Estate Development, which is working with churches and dioceses around the US, as well as in some cases internationally within the Anglican Communion, to help them think about developing any property they might have to help to support their own sustainability. And there may be opportunities that arise during that work in terms of investments that we could make with our portfolio. And then finally, racial justice and looking at opportunities to help support racial justice and racial equity in underserved areas, particularly in underserved communities in New York City.
That broad rubric is pretty similar to the way that we've approached it at Church Pension, where for us, SRI, or socially responsible investing, is an umbrella term that gets at all of our activities in this area. And then we talk about 4 pillars that support that. One of which is what we call impact investing, and so that's again trying to find things where we can have where we can bring positive benefits to some constituency alongside going after the returns that we need to make in order to pay our pension and medical benefits. ESG then is a lens, so consideration of those environmental, social, and governance factors, typically as we evaluate investment managers and think about what they're paying attention to. We also talk about shareholder engagement. That's a 3rd pillar for us, where we own shares directly or indirectly in companies. We want to engage with them to try to align their approaches with our values. And then we talk about thought leadership, which is really this series of events and related things. Monica, Mark, anything to add to that? Any different lens on what these terms mean?
I'll jump in. We were thinking about this in terms of ESGs being a little bit more of a proactive, thoughtful approach, pros and cons of environmental concern, pros and cons of governmental and social. So think about it as proactive, SRI not necessarily reactive, but a little bit more about exclusion and filters. And so as we've been grappling with what ESG means locally for trustees of the funds, we've been thinking a lot more about how it can positively shape both return, but also consider the value, whereas it's a less of a category for filter. That's been kind of our discussion around that.
Mm-hmm. Fair enough. Yeah. Monica, anything?
Yeah, I mean, I don't have, I guess my observation is that I think Meredith and you, Michael, have done an excellent job of sort of sorting through a lot of language and taxonomy that can be interpreted differently by different investors in different places. And the importance of really taking a hard look internally at what those terms mean to you, your organization, your pool of capital, and how you want to express those views, like cannot be, that can't be too important, because in the marketplace, a lot of these terms get thrown around in ways that don't necessarily, that may not comport with the way your organization may think about it internally. And so sort of going back to first principles and thinking about, okay, what does that mean for us? And how do we want to think about it is a key success criteria.
So sticking with that theme, Monica, and maybe staying with you, as we think about shaping efforts in this area, the opportunity set that you have as an investor and then the constraints that you face are going to be influential in how you approach these topics, right? And so how does that work? When we think about the Weizmann Foundation, but then think about the Diocese of New York, whether that's time and resource constraints, whether that's the need to have cash available to make payments and so on. How does that shape an approach to SRI?
Yeah, that's a good question, because that's just where I stopped and thinking about the answer to the previous question, is that looking at the Diocese of New York, we do not have an extensive investment staff or a lot of full-time employees who can kind of run down interesting off-the-run ideas or do a lot of portfolio work or be influential with the managers in our portfolio about what kinds of investments they want to take on and how they want to be engaged. We really are looking at what is the universe of solutions that's available to a pool our size. And when we did an exercise a year or two ago to evaluate who the consultant was that we were working with on the portfolio, we use an outsourced chief investment office. We were able to talk to those groups about how they engage with managers, because it's always going to be at one level of remove from the diocese, given that we don't have staff who are doing that directly, where you and Meredith may have a staff who are having those conversations with managers yourselves. Given our size, we're going to be pooled with other investors. And so we need to find, in our case, it was an OCIO or a partner who is going to be aligned with us and think the way we do about what we're looking for in the portfolio, but also that applies to the rest of their clients as well. And so that was an important part of our process.
Mark, it must be pretty similar at Southwestern Virginia, right? In the sense of finding a handful of key partners that you can work with across the assets rather than going one by one. Is that right?
Basically, we have a small pool, so we're pretty, we keep things tidy and simple. Simplicity is kind of a mantra of ours, is not making it too complicated. Is to some degree, our board is a bit of a partner in the sense that it's a wide range of different personalities and insights from across the diocese as it is. So that little reflection on that.
Yeah. So Meredith, you're in a slightly different position. You've got a staff, you've got a pretty broad range of assets. At the same time, you may face other constraints that are associated with the need to make payments to support the ongoing mission of the church and so on, right? You're not disconnected from that. So how does your opportunity set and your set of constraints shape the SRI effort at Trinity?
Yeah, absolutely. So a couple of things. So the endowment is it's the crux of kind of funding everything that Trinity does, both as a parish. We also have a fairly active grant making and support that we provide to our neighborhood in New York City, to the larger Episcopal Church, to the Anglican Communion. And so, it's the importance of stewarding the capital that was left to us is a responsibility that we take very seriously when we think about the future generations that'll come after us. And so, first and foremost with our assets, we're looking to make a return. That being said, the team spends significant amount of time with the managers and underwriting the managers that we decide to put in the portfolio. And, that's the responsible, or the questions that might, if you looked at them, seem more obvious, responsible investment questions and more values aligned and ethics oriented, are a very deliberate part of that whole process of spending time with our managers and understanding their alignment with us, where lines in the sand are for them, what they're comfortable with, helping them to understand how we think as a church. And so, that is the crux of the relationship we develop with managers up front when we go in and make an investment. And it is the continuing relationship that we have with them as various things develop in the world and new questions strike us that, haven't been thought of before, or different risks present themselves that broadly fit under responsible investing, but perhaps weren't something that was a focal point when we initially invested.
Yeah, the main constraint that we face at CPG is the fact that, obviously we're a pension. And so that means we're a fiduciary on behalf of all of our beneficiaries, not just the current ones, but the ones that we hope will be coming into the plan in decades and centuries to come. And so that's a real stewardship responsibility. And the fact that the plan is an open plan means that we have to grow the assets significantly over time in order to meet those obligations. And so the number one thing for us is making sure that we're generating at all times the returns that we need, and by law and by moral responsibility, all of the decisions that we make have to be in the best financial interest of our beneficiaries. The flip side to that is that we're of sufficient scale that we've got a significantly experienced and skillful investment team, and they've got the expertise to look at a whole range of opportunities and find the best ones for us. And in particular, a lot of our investments are in private form, where we're locking money up for oftentimes years at a time. And we've developed the expertise to evaluate those opportunities and think about the trade-offs associated with making the impact investments. The maybe slight downside to that, if it counts as one, is that we do have access to all kinds of great opportunities for our beneficiaries. And as we evaluate everything, the impact investments have to stand up to the other investments. And so that creates a high bar. We can't give up on the return front to make impact investments, and the investments that we've got access to are typically pretty high returns. So it's a stiff competition for anything to make it into our portfolio. We talked a couple times already, Meredith, you mentioned the values of Trinity. Others have mentioned the values of the church overall. Here at CPG, we're our stakeholders sit across the whole church, not just in the U.S. but internationally. If we think about Province 9 and the convocation in Europe, and so that raises the question, just as it did when we said what is it we're talking about when we're talking about socially responsible investment. What are we talking about when we talk about church values and investing in ways that are consistent with church values? That's a tricky question. Mark, I know you've thought a bit about that. How would you approach this topic? What do we mean when we say we're investing in a way which is consistent with church values, and whose values are those?
Right, it's a very rich question. I tend to come at it from a theological standpoint in terms of thinking about missiology, and if we're joining God's mission, how do we discern that, and how do we work on discernment in the Holy Spirit, what the Holy Spirit's sharing with us and calling us to? And in our work locally in Southwestern Virginia, we did quite a bit of work last year thinking about church values and what that meant at the Trustees of the Fund's board level, but doing it from a local level and kind of really spending time with the Holy Spirit. We do a scripture study at the beginning of every board meeting. We spend time thinking about our diocese. Our diocese alone has many perspectives across Southwestern Virginia. And so to really think about it from what's the Spirit calling us to? How are we engaging the Spirit in its current activity? What does it mean to be about it locally in Southwestern Virginia, the Spirit's call? So that's from a theological standpoint. There's this added wrinkle of what is the diocese? Is it diocese proper? Is it the bishop's office? Is it all the parishes together? How do we discern that together? And so our pool focuses predominantly on diocese investment, but we have investments of some of our parishes invested, what's going on in their locales and what their thinking is. We have a lot of different parishes that have their own unique character as well, and prayer life. Yeah.
Monica, Diocese in New York is maybe a slightly different place from the Diocese of Southwestern Virginia, but it's still not entirely homogenous, is it? How do you think about this thing?
No, I was listening to Mark thinking that the principles really do still apply, right? And I think one of the reasons why I am a volunteer, trustee and committee member, and why the governance structure is organized in such a way that there are participants from a number of parishes across the diocese is in an effort or a nod to the diversity that is represented in all of those different parishes and in all those different locales, to give a little bit of a sense that that those folks are all in the room.
Meredith, Trinity is, I was going to say it's just one parish, but it's obviously quite a parish.
Yeah,
right. Is it easier for a single parish to make some determination about what its values are as they might relate to socially responsible investing?
I think any parish that has more than 2 people attending on Sundays probably is going to be challenged to come to a very clear, this is black and white. So we try and recognize that there can be a lot of grays, and as a parish, be a home to a variety and diversity of views on all sorts of issues, whether they're investment related or otherwise. And so, the conversations that we have in this regard, they start at the investment team level, since the investment team is focused on investing the portfolio on a day-to-day basis, but then they go up to our investment committee, which is an oversight role. And within both the investment team and the investment committee, there are larger conversations, of course, that are happening around that, both in the context of the rest of Trinity's staff, Trinity's leadership, the congregation, and there are just regular conversations that are going back and forth. I think, sort of to Mark's point, there can be, the Spirit can lead you to different places at different times. And so we always leave the door open to reevaluating the conversation, and whether where we were comfortable yesterday is where we are comfortable today, or where we might be comfortable tomorrow. So it's a constant conversation that we're having amongst all those various stakeholders.
Yeah, similar for us with our huge range of stakeholders, right? Again, across the whole church, and again, given our mission in terms of paying the pension, we've identified that as in fact a core value, that we've made this promise to the beneficiaries that we have to keep. And if we go back to Bishop Lawrence and the other folks who helped to set up the church pension fund in the first place, I think the original mission, which continues to resonate with us, is that really we're sort of like a force multiplier for the church, in the sense that because of the presence of the pension, we hope, and Mark, we hope you feel this way, that knowing that that's there as a backstop allows each clergy and lay employee of the church to devote themselves wholeheartedly to pursuing their mission, spreading the gospel and doing all of the work that they're doing wherever they are and wherever their own careers take them. And so we feel like our primary goal and our primary value is playing that role. And the specifics, then it obviously gets trickier. We need to make sure that we're not getting pulled in too many different competing directions based on whoever the last person is that we spoke to, and we know different people will have different emphases. So we kind of always take it back to that overarching value of keeping the promise and allowing then the different forces within the church to flourish in their own individual and collective ways. So let me turn the question now to the word proactive was used earlier. Mark, I think you're the one who used it. What do we think about when we talk about the trade-off between proactive investing in a socially responsible fashion and sort of exclusion policies, or saying, listen, we're not going to do this thing or that thing? When it comes to maybe shareholder engagement and in particular. Monica, I wonder if you could pick this one up. How do you think about that? What's the balance and the trade-off between saying this is socially responsible investing is about what we are doing, or is it about what we're not doing?
Yeah, and certainly in any context where there are students, there can be a big call to divest from certain kinds of investments. And I think in the school portfolio that I look at here at Weizmann, and also in the Diocese of New York, I have always advocated that the impetus to divest is ultimately disengagement. And particularly on smaller pools of capital where, if I, given our size, called up, whatever fossil fuel exploiting company you want to think of and said, if you don't change your ways, I'll sell the stock, I think they would say, go ahead. And it's hard to feel like that kind of disengagement can be influential. And so I've generally advocated for more engagement than screening out. So are there ways that we can encourage our managers to make progress over time in the companies that they do own? And to reward that progress over time, more than saying, if you do X, Y, Z, we're going to exclude you, and ending up, where you're the last, where the island of things where you sort of voted out all the sectors off the island of investable ideas. You'd sort of rather say, well, if I'm looking at this range of options, this one that's made a lot of progress in finding greener sources of energy for their manufacturing projects, or this one that's done a terrific job at integrating their local community into the employee base. Those I really want to foster and encourage. Feels like a better way to influence the outcome in the portfolio.
Mark, any perspective on that, on this trade-off between being proactive and engaging versus disengaging?
Yeah, I think sort of a spin-off of the discernment conversation is it's just all about learning. And so if ESGs is about both practical return and thinking about Christian value, we're learning about both at the same time. And in the process of discovery on environmental concern or environmental opportunity, governmental concern, governmental opportunity, there's pragmatic aspects about what you could do in the market with that to create return. And there's also some consideration around what you may want to avoid. But there's an opportunity to think about return and also the Christian value along the way. And both are a process of learning. The Spirit's still speaking, and the Spirit's still offering us an opportunity to learn through it, both practically for the sake of investing for mission, expanding opportunity through financial gain, but also through concern about the environment and social items and other Christian concern.
Yeah, on the shareholder engagement topic, and specifically that Monica, you brought up, that's as I mentioned, one of the pillars of our SRI effort, and I think we've come to the same conclusion that you have, that actually we want that seat at the table. That the world's a messy place, and if we're going to operate a pension, we need to be engaged with that world, and we would rather have a voice. And so where it so happens, now we don't buy shares in any particular company for the sake of engaging with those companies, but where shares have made their way into our portfolio, we look very proactively for companies with whom we can productively engage. And we're not, I hope we're not naive about it. We don't think that we're going to walk in and make a proposal and somebody's going to completely reorient a corporate strategy from one day to the next. But it's about trying to do as much good as we can with the resources that we have. And we have seen some successes. We had one over the course of the last couple of years. It was a project with airlines, where we were working on human trafficking issues, and we're able to, we think, significantly raise awareness of that issue with top management at a couple of the key U.S. airlines, and that resulted in training programs for their employees and various monitoring efforts and so on. And we feel like there's people out there who actually really benefited from that activity. We could have just sold the shares. But Monica, to your point, we probably would have sold them to somebody who didn't care about that issue. And so again, we know that not all of our efforts are going to flourish, but we want to keep trying because we think that's better than taking an arm's length approach to this.
I don't want to be out of turn, but
yeah.
I love Mark's framing of learning, and I think particularly in the context of what you just said. I don't think any of us called out the investment horizon that we're working with, but in many cases, we're looking at very long dated assets and goals for these pools of capital that are decades long. And I think a context of engagement and learning and what what do we learn as we continue to progress toward our goals? Not to say that we're, not expecting a decent pace of change, but just having a long-term perspective, I think, is an important frame for thinking about engagement and learning over time, as opposed to, point in time decision. Do I want to own it or not own it?
Yeah, that's thank you. That's a great point. Meredith, you talked about your focus areas for what you call mission investing. Can we hear a little bit more about that? Why do you think it makes sense to have these focus areas? Is that in order so that you develop expertise in a particular area, or is that more like being aligned with something that you feel is a specific value of Trinity, is relevant to your area and community? How does that all come?
Yeah. So a couple, it's a pool of capital that we're actually willing to be a little bit more, take a little bit of a wider berth in terms of either the return expectations or the extent to which it has risk. So it's not the pool of capital where we're focused and getting the kind of the return over time that supports the long-term sustainability of the pool. And so within that, then, it is a means of recognizing that we have a thinly staffed team and there are only so many hours in the day. And then, using that as kind of using the areas of mission focus that Trinity has to really go deep on these areas that we care about and look for investment opportunities that are presented within those specific areas. The impact, as you know, the impact investment world is broad, and there are lots of different ways that you could pursue investment opportunities that have an impact orientation to them or promise an impact. And so this is a way of helping to boil that universe down a little bit and have it in a way that is much more aligned with areas where we're already focusing and trying to have significant impact in the world.
Monica, does that resonate with you? Do you think it makes sense to designate focus areas, or do you prefer an approach of just saying we're going to look at everything that comes along and pick the best of the best?
Yeah, I mean, I think focus areas are super important, and it comes back to the conversation we had at the beginning about how do you decide or come to consensus on what your true priorities are. I just think it's hard to do everything all the time with limited resources, limited staff, and everything else. And so the more specific you can be about what you want to accomplish, the more likely you are to be successful. I think in my day job, our biggest impact investment is the investment in science that comes out of the labs, and the efforts that we make in tech transfer and trying to take that science and create commercial applications for it is sort of the closest we come to a real impact investing sleeve. But most of our scientists are very motivated by the impact that their discoveries can have on the world. And so that's sort of a good example of where the mission and the investing work come together.
Yeah, Meredith, I guess the way we've thought about it is less about designating targets or bands or anything like that, and really more about using the expertise that we've accumulated over the years. So we have a fair amount of experience in allocating to real estate funds. And so we've used that, for example, in affordable housing areas. We've made a number of investments there where we're looking for to support development of affordable housing. And then we also have significant investments in venture capital, which is really all about taking projects, getting in at the early stage, and then experiencing that sort of long-term value creation. And you're obviously taking on a lot of risk there because you're in the startup phase. And so in areas like climate tech, we've made investments that look very much like venture capital type investments, where you're trying to get in on the ground floor and seed things that ultimately will do some good. And so it's really about trying to take what we know and seeing if we can just tweak it a little bit in ways that will be beneficial.
Yeah, and Michael, your team has phenomenal experience. I mean, you guys have been doing this for a while now, and so I have a ton of respect. And that, in many ways, ours is the version of that, but going from a standing start. And that we try the building up the experience and the knowledge and sort of certain viewpoints as to what's interesting in both affordable housing and racial justice starts first and foremost with conversations with our grant makers who are very active on that side of things, and then kind of developing from there, okay, what are opportunities that have some sort of financial return component as well. And so it's trying to basically build what you guys have built over many, many years.
Well, thanks for saying that. Mark, maybe take this down to away from these sort of private investments where you really need, I mean, you have to have a staff and you have to have the ability to lock up money for a long period of time. And that's a luxury that we have and Trinity has, but not everybody has that. If we think about, sort of in more kind of day-to-day portfolios, how do we think about SRI funds? So let's say we want to take some portion of what we have in the stock market and put it into an SRI type of investment, but staying in stocks. What's the way to think about that? Is that something one should try to create for yourself by putting together a list of things you want to own, or do you want to buy something off the shelf? And how do you evaluate the offerings that are out there?
It's a great question. We've opted not to buy off the shelf necessarily. We just have a limited pool of capital. So getting super targeted about what we want to do is not something we've explored. We have partnered with our manager to think through what they're engaged in already. So partnering with them closely, thinking through it from a broader perspective has been essential to our work. I was thinking you all were talking about long-term horizons, and for me, sometimes it's day to day. And so long-term in sense of church and stabilizing church investment for mission locally and looking at it from a little bit more conservative investment perspective, there's one horizon, but then there's day to day. We have some parishes that next quarter they're ready to withdraw for some sort of emergency or roof thing or whatever is going on. So we're not looking at an investment horizon necessarily, but we're looking at a church horizon in terms of long term and offering stability for both the diocese and our congregations. But in terms of the ESGs and the SRIs, we have worked with our managers. Some we've explored, a couple of sophisticated off the shelf things, but we've just preferred to hang back and be a little bit more on the generalist side of things and thinking through what do we have, in some cases, soft exclusions. But nothing super prepackaged.
Monica, how about you? How does the Diocese in New York approach this? And how would you approach this if you were thinking about making SRI investments, sort of in let's say stocks or bonds? Is that something you would want to customize, or is that something where you'd say there's a bunch of these offerings out there and let's find the best one?
In terms of the Diocese of New York, we also have worked with our manager to ask them about their dialogue with the managers that they work with and where they think they are in their journey on engagement with ESG and SRI principles. And so at the same time, we also try to measure that progress. And this is where I think actually the school where I'm involved has made the most progress, and asking the outside managers to account for what their internal process and policies are on engagement on SRI topics. And then also to report statistics on the underlying portfolio companies and stocks and bonds that they own, so that we can see how those are changing over time and have a conversation with the managers about when they're not going in the direction that we expect. Not that they're going to get automatically kicked out, but if we see surprising results, it should prompt a conversation. So it's more of an engagement approach kind of in both scenarios. I think the Diocese of New York is a somewhat smaller portfolio, so we are in some ways beholden to what the outside manager does in their process. And we've been pleased with what their approach is. So we have not felt like we wanted to go away from them and have a specific SRI or ESG fund.
Can I ask about fees in this context? I mean, as asset allocators, all of us have to think about not just what we're getting, but what we're paying for it. And when we're engaged in public equities, for example, in particular in the stock market, we know that paying high fees is a way of eroding the returns pretty quickly, right? And so, Monica, what's the sort of the fiduciary approach to that? And maybe Mark would ask for follow-up on this one as well. When you think about what you're trying to achieve, does it make sense to pay higher fees for things where you feel like there's an ESG lens, an SRI lens on the topic, or is that a sort of a breach of responsibility?
Well, I guess the component we haven't talked about is risk. That is one framework that has been helpful in various committees I've been on to think about that there's a performance component of the portfolio, but there's also what risks are you taking? And to the degree that you think your ESG or responsible investing lens mitigates some of the downside risk of there being a big public disclosure of disaster, it feels like that's an investment that's worth making and understanding what the risks in the portfolio are. But it is tricky, and particularly in public markets, thinking about what have we paid in order to underperform a broad market index over X period of time. You sort of have to look at the risk component as well.
Mark, what do you think about that?
Yeah, so as I said, for the trustees of the funds, the simplicity is bliss, and keeping it very simple and cost effective. Our pool has had a cost structure that is very low for a long time, and that's been important to us, and our sort of simplicity mantra. I would say that we haven't really engaged, and we're mostly in public equities and fixed income, so we're not really about getting too specific into particular areas. So we're not really looking at investing in something that's going to have a high cost in that regard, but we're vigilant, and we're having the conversation. I think that's the most important thing, and not to sort of sidebar or tangent, but to say, if you're having the ESG conversation intentionally, getting back to the proactive conversation and you're having a conversation intentionally as a board, thinking through it as you work with your whole portfolio or parts of your portfolio, then I think you're being faithful. And that's really important. And so we keep it lean and we keep it more broad brush, but it's been a part of who we are in that regard. And we've also been able to address the ESG through intentionality. So.
And Meredith, maybe related to that, so we talk about paying fees for this kinds of things, but then thinking about the returns that you're going for. So did I understand focused investing, you're willing to take a lower, now the world's uncertain and we never know in any investment what we're going to get out of it, right? Until it's been fully realized, but we make assumptions going in about what we're expecting to get. You're willing to take a lower expected return for mission-based investing than you are in the rest of the pool?
We are. So it's a very, specific, we've sized it in a way that we think we can sustain, that we can manage it over time while also sustainably making the returns we need on the whole pool. But that we've been very specific and had that conversation over years, frankly, with our various governance levels. My hope, I would love to be able to say, 5 years from now, 10 years from now, that it had comparable returns. but it's a very focused portfolio. And so to some of Monica's points about risk, I mean, we know we're taking focused risk in terms of the fact that it is in very specific, a very specific handful of strategies.
And do you, I mean, I don't want to pin you down and make you give up your secrets or anything, Meredith, but are you specific about those things when you say that we need, without naming specific numbers, the overall return we're aiming for is X, but we're willing to take Y, which is X minus something else in impact investing? Or is it more like, oh, this is in the ballpark or what have you? How do you think about, I mean, sometimes these things are all, we're making up all these numbers anyway, but.
Yeah, so we're kind of about 2 years in on this effort. So I would say we're still feeling the way, and the other piece of it that we spend a decent amount of time talking about and is also less clear is what is the impact that we hope to get and how do we measure that? Because that is actually first and foremost what's most important with that pool of capital. Like, we hope actually being willing to invest it in slightly different ways will deepen the impact we're able to get in our mission areas. And then if we could get attractive financial returns on top of that, that's great. But it is, it's a small fraction of the larger pool, in all honesty.
And that measurement you're talking about, Meredith, would be specific to the investment. It's not like, you can have like, there's 100 units of good or something that you're doing, right? It's really about, if it's affordable housing, it's X number of apartments.
X number of units, or the affordability level stays, or it's, it's going to stay over some period of time. It's a variety of metrics that we're looking at depending on the investment.
Yeah. Mark, how do you think about this whole question about measurement of impact and measurement of what we're trying to achieve with socially responsible investing? I mean, one of the, over the last 20 years, in business in general, people start talking about, what gets counted counts, and if you want to achieve something, you've got to measure it, and so on. But in this very broad and not always well-defined area of socially responsible investing, how can we think about measuring what we're doing? And does that concept make sense? How do we evaluate what's working and what's not working?
So I think there are two things that come to mind for me on that question. One would be just to get back to the sort of theological lens, missional metrics in general. We were talking about the parochial report earlier, how that's expanding. We had the demographics section that was real simple, and we had the financial section about total income, total expense for parishes, and we're broadening out that report to sort of think about how we measure being church, whether it's some soft measurements and narrative or other, or some data and numbers. In the same way, I think that if you're looking at and discerning what's your focal point of mission locally, is beginning, you can, in the vein of learning, is beginning to build some metrics around around return and around what you're doing in the portfolio that might help you measure your success for what that means for you locally, and to experiment with them, experiment with the metrics, experiment with the numbers, and run the data. There's nothing wrong with that, and it lead to more learning. And I think that's good to struggle with. And I think the church is thinking about that. What makes us a successful church, and what makes investment for the church successful, I think come together. So,
Monica, you talked a little bit about measurement earlier. What do you think is the right approach here in terms of trying to quantify what we're up to, or is it inherently qualitative? How should we think about this?
I mean, we could do another hour webinar on measurement, I think. And as I said before, the group that has done the most work there is the school that I work with. And their view is that the measurements are all imperfect. Their primary focus is on fossil fuels, environmental sustainability. So use of fossil fuels, carbon footprint, those kinds of metrics. And I think the conclusion had been, we don't think any of the metrics are particularly on point, but we're interested in measuring as many of them as seem plausible and trying to identify progress. So it's sort of triangulation to, are we going in the right direction? More than it is, measuring the impact of affordable housing on affordability in the neighborhood. I'm envious of other more direct metrics that may be out there, but it's part of that cycle of measuring, learning, asking ourselves the question of, are we accomplishing what we're hoping to accomplish here? And then kind of, going from there, year in and year out.
Mark, that feels pretty similar to what you just said, right? Where it's really about a journey where you're constantly inquiring and
Yes.
looking for answers, and knowing that you're never going to satisfactorily answer the question, but trying to get a little bit better every year. Is that the best way to understand this?
Yes, I really appreciate the way Monica reframed a lot. Is this the qualitative side? I appreciate the fact there's nothing wrong with soft measurements too. It's combination. I think there can be data and qualitative metrics, and it is a journey. Our bishop and executive board here locally, we focused a lot on evangelism lately, and also becoming the beloved community are two sort of central focuses for our mission in our diocese. So we're exploring what that means, and how to grow into becoming the beloved community, for example, is something you need to explore. There's not a one size fits all for it. How we do that in Southwestern Virginia is different than the Diocese of New York and other places. That's okay. And there's also some data things that you can do. I love thinking about missional metrics and church metrics from a data perspective, and I'm really glad Monica just she's reframing some of it, and from each side of it, I guess. So.
Meredith, just to finish up here, since we're coming up on time, Trinity has a reasonable amount of capital. Church Pension Group has a reasonable amount. Individual dioceses and most parishes are a bit smaller, but even at our size, we're a drop in the bucket relative to financial markets in general, which kind of gets back to that point about what good does divesting do. But what are effective ways that investors can join forces with others of like minds to advance particular goals? I know Trinity's been very active in a number of such organizations. What's the best way to think about that?
So to your point, I mean, even with engagement at the crux of where we, are focused in terms of our relationship with our managers, and hoping then that they are equally focused on engagement with their underlying investments, there's only so much that we can do. So we spend a lot of time staying on top of what other faith-based investors are doing, and, just staying up to date, talking with our peers, talking with groups like ICCR, and staying on top of what they're doing. So understanding just, where broadly faith-based groups are in this regard, as well as looking at some of our peers from other denominations and what approaches they're taking, so that we understand where we might be aligned and where we might be able to kind of lend our voice or be part of a larger voice. That's kind of where we've been most active in thinking about where we can be more engaged, given limited resources.
Yeah, we've taken a similar approach, and one thing that we do on the engagement front there, that's really about trying to put together coalitions that will catch the attention of corporate management, right? Because if each of us individually owns 0.001% of the company or whatever, it's pretty easy to dismiss us, right? And so we work with a couple of different consultants that put together broad groups of investors for engagement purposes. And in our case, particularly, we try to make sure that we're aligned with church headquarters in this respect. And that again, it's all about force multiplication. So I'm afraid we only got to a handful of the many questions that people sent in, which were wonderful questions. And so maybe we'll have to keep coming back day after day to this group to explore these topics further. We're sorry we weren't able to answer all of the great questions that we got, but thank you for submitting them. I will ask one question to Mark to close this out. Mark, you made a fan during the course of the conversation. The question is, does the Diocese of Southwestern Virginia accept investing parishes from outside the diocese?
I actually answered that question directly to the anonymous person who submitted it. We are currently discerning that as a possibility. And considering that it's not something we've done in the past, it doesn't mean it's not something we could do in the future. But yes, it's a good investment pool, and so we're thinking about the question. So it's currently open-ended. That's what I replied.
Speaks well for your impressive participation in the event today. So that'll close us out. I really want to thank Monica, Meredith, Mark for participating here. It's wonderful to see the talent and dedication that's arrayed across the church. And today we only tapped into the pool of people whose first names start with M. So we're obviously just scratching the surface. But thanks very much to all of you. I want to also thank my colleague Christopher Rowe, who leads socially responsible investing efforts here at Church Pension Group, for his coordination work. Very much appreciate that. And thanks to all of the viewers who dialed in. We really appreciate you spending this time with us. We're looking forward to continuing this conversation over the months and years to come. And we hope that we will see some of you at General Convention in just a few weeks' time.